Good morning, traders. This is our weekly market preview and analyses for the week of Monday, December the 19th, 2022. All right, the week of the 19th, let's go ahead and get into it, heading into the Christmas holiday. Hope you guys are all ready. Hope your shopping is done. You're running out of time if you haven't. Boy, to say that last week was a interesting week would be a huge understatement. All kinds of news catalysts, and I was so pleased with how we were able to trade and how adept and adroit and flexible and quick we were on getting in and out of trades, not letting trades sit, pulling profits as soon as we saw them. And it really did end up paying off for us last week. We had another really successful week. This week, I do believe there's going to be a little bit different situation dealt to us in terms of potential volatility. You're going to see some numbers this week, I think, that are quite a bit different than last week's numbers. So let's go ahead and take a look at it here. We do look at our technical matrix on a weekly basis here. Again, inside of our trading room, we break this down to more of a daily basis. But a couple of things that I think are interesting to me as you pull back again a little bit here and look at the E-minis on a weekly basis is that we are, of course, still in a sell mode. And that's pretty clear, obviously, that we're in a sell mode. This 39.35 pivot point area for me, I think, is a big area. We are sitting below that right now. Futures are up about 11 points as I am speaking right now. Monday morning, as we get ready to open up the cash markets, we're sitting at about 38.90. And so we're not that far off of that pivot point. I think that's a crucial area, this 39.35 area for the bulls. If they want to try to gain some momentum back into this marketplace, they need to recapture that 39.35 level. You know, you look at all of our technical indicators, and nothing that we look at is really implying that the market is oversold or overbought. Really, you could almost make the argument that we're fairly valued here. And I think that you're going to see that in some of the volatility numbers here in just a second. There's just not a whole bunch of implied volatility. We just went through OPEX quadruple witching on Friday. One of the biggest quadruple witching days that we've had in the marketplace in a really, really long time. And that has cleared out a lot of gamma walls. It has cleared out a lot of open interest channels. And those need to now reestablish as we go forward into the next option expiration cycle. So for right now, I don't really see anything from a technical standpoint that really, stresses that we're oversold here or overbought here. It really almost just implies very little, if any, movement at all until we do get a new catalyst. We are, again, still firmly down below almost all of our major indicators, save for the 200-day indicator still flashing a buy signal for us. But other than that, we are definitely still in a sell mode on this marketplace. We look at some key support resistance areas on the daily chart for the E-minis, and a couple of areas that I'll just point out here to you that I think are of interest to me. First of all is the point of control. So the point of control is always, that's where we have the most open interest. That's where the most activity is. That's where the most orders sit at. And on the E-minis right now, that point of control is sitting right around that 39.50 level. So again, that 39.50 level, I think, is a real critical area for bulls. If they could push up above that, good chance that they might be able to build a little bit of momentum there. Just down below the point of control is VWAP. And VWAP sits around 30 39.909. So those are both areas. We are down below. You can see right here. That's point of control, and that's VWAP right there. So we are down below both of those. Those are acting as a little bit of resistance and overhang for the market right now. So again, if you're of a bullish ilk, you would really need to recapture both of those areas to sort of start getting that all clear for the bullish side of the marketplace. That's going to be a tough go, I think, at least for the next couple of days. As you look at the major ranges here, the major ranges that I'm looking at in this marketplace really would be in this area right in here. And so you're talking about maybe the 4,100 level. Horrible handwriting, I know. 4,100 and 37.21. Somewhere in that range. That's the big major area that I think we are going to be stuck in for some time. Obviously, I could be wrong, but I don't see a lot of catalysts coming our way in the near future that would push us out of that major range. So again, that 4,100 level to that 37.21 level, that's important for us in our longer term trades. Obviously, we do a 0 DTE trade every single day trade. And we do weekly trades every week as well. But we also put on 30 to 45 day trades just as part of our diversification process of our model portfolio. And these are the numbers right here that become really critical for us. This 4,100 level on resistance, this 37.21 on support. So from a bigger standpoint, from a bigger picture, that's the areas that I'm looking at. Now, if we draw down to a 2-hour candle, and this is usually what I use to build my daily levels off of, these 2-hour candles periods. There's a couple of areas that I think jump out at me here as being important. Well, number one, of course, obviously, is that you can see the trend is decidedly down right now. We are back to an area here, this sort of demarcation point right here. We've been there for a while. We've been there for a little bit, and it is what I like to always call the cliff. We get to these cliffs, we sit on them. We've been at a cliff for a long period of time. We were finally able to break up above it, push back down below it. We're down below it now, sort of sitting at another cliff area right now. But the numbers for me that I think are really critical to look at as we start today, as we start Monday, is this 38.77 level. We're sitting at 38.88 right now as I speak. This is a level that really, since the futures opened up, we've been bouncing back and forth with here. And it has become sort of a critical demarcation point, this 38.77. So I think that's going to be our starting point for today. We push up above. I'm going to start to look for a little bit more bullish patterns. We push below. I'll look for a little bit more bearish opportunities. But that's sort of our support right now, above 38.77. Or excuse me, that would be our support level. So going down below 38.77 would be 38.58. And below that is 38.25. And then the big one would be 38.05 to 38.10, somewhere in there. So that'd be a pretty big one right there. If we could get down there and break below that level, that would give the bears a lot of momentum here going forward. So these are sort of my support levels going down today. Resistance levels on the top side. Resistance would be, again, that 38.77 level is a key level, but above 38.77 would be 38.96. And that's a pretty big resistance level. Above 38.96 is 39.13. Then we get 39.25. And then above that is 39.37, and then 39.52. 39.52, it would be the big one for the bulls. If they were able to push up above that, that would really sort of change, I think, the dynamics for the marketplace. So those are the numbers that I'm looking at today as we get started trading. If we look at all of the major indices that we look at, as denoted by the ETFs, you can see that all of them, save for the diamonds, have pretty much come back in line with that downward sloping trend that I've been denoting really ever since January of this year, so almost a year ago now. You can see that we had pretty much a falling in line of the S&Ps here and of the Qs. It was the IWMs that broke out above, and it was the diamonds that broke out above as well. Both of those have come back in line. Diamonds are still the strongest of all the indices that we trade, but those are right back at a very big demarcation point, this whole area right in here. Huge demarcation point for the diamonds. If we can push that below at all, I think we really can build some downside momentum there. That would be good for our diamond ladder that we put on every other week. That's been a tremendously successful trade for us, and it has also been tremendously successful, not just from results, from win-loss ratios. Haven't had a single losing trade in it yet, so you can't get better than that. But it's been great from an ROI standpoint as well. However, we've had to chase this. We have had to chase this thing all the way up here. So that's getting better for us. We've manipulated that trade. We've adjusted that trade quite a bit. Sort of the same situation with our IWMs. We use a credit strangle rather than a spread on the IWMs, and that's made it a lot easier to adjust that trade. And boy, knock on wood, we've got 2 weeks to go in this year. We are 2 weeks away from finishing the year with trading the IWM weekly strategy and never having a single solitary losing trade, single solitary losing week. So I hope we're not jinxing ourselves there, but 2 weeks to go still on that. It looks really good, obviously, from this standpoint. We take a look at some of the other numbers that we look at. Earnings are coming out this week. We do still have a decent amount of companies reporting earnings this week. We had a really good, solid week last week, trading a couple of earnings trades. And we've still actually got a couple of those. I'm going to take a look here real quick. We got a couple of those that we're still working right now inside of our portfolio. But it was an awesome week for us from our earnings trades standpoint. There's a couple that I do still want to take a look at this week. They're both reporting on Tuesday, and that would be FedEx and Nike. So we're probably going to look at putting a trade on both of those, at least one of the two, but hopefully both of those this week going forward. There's some other ones as well, but those are the main focuses for us this week. We look at the sector rotation for the week, and as you can imagine, with the market being down the way it was, there was pretty much red across all of the sectors, with maybe a little bit of strength coming back into energy. Energy's been really beat up the last couple of weeks. We've seen some strength come back into that, but technology and consumer discretionary continue to just get really beaten up here. And I've said this for a couple of weeks. Keep your eye on the technology sector. When it turns, it tends to turn in a big way. Usually what leads us down leads us up, and what leads us up leads us down. And so it is the tech sector of the marketplace right now that I'm keeping a close eye on. If we can find some bottoming, if we can find some support there, I think that's probably one of my next big bullish plays would be the tech sector. We look at the heat map from a week over week basis. This would be 2 weeks ago right here. And then this was last week's results. You can see not a whole lot of difference other than what I already denoted, which is there was a lot of weakness again in technology, and we were building a little bit of strength in energy. Other than that, not a whole lot of difference in price action in the marketplace. We look at, again, the major indices that we track. We do trade a specific setup, a specific strategy for each one of these ETFs every single week. This strategy right here with the SPYs and the Qs, that's combined. but they work simultaneously, and many times we're working one side of that trade versus another side of those trades. So they almost act as a hedge against each other. We have a separate unique strategy for the IWM. As I've mentioned, it hasn't had a single losing week all year long. It's on track for about a 50% return for the year. So I mean, it's hard to hope for any more than what we have gotten out of that trade. It has just been fantastic. And then we have a separate ladder trade that we use on the DIA that, based on how much the diamonds have been pushing up over the last couple months, the results have just been phenomenal. They really have been absolutely phenomenal. And so, again, one of the things that I always try to stress as you're looking at all of the strategies that we have inside of the trading room and trying to decide which ones are right for you and which ones meet your criteria. If you are looking at any of these strategies that we trade, I highly, highly recommend that you trade all of them. Because as you can see, this is 2 weeks ago. This is last week's results. You can see that there is, number one, quite a decent amount of variance between each individual index. And if you will trade them all together with the disparate strategies overlaid on top of each other, you're going to get a lot, I think, smoother, more consistent result over time. But again, we're still in that sell-off mode as you look at what most of the numbers look like here. We look at the put-call ratio in the marketplace. And again, this is just a sentiment ratio. It gives us an idea of whether or not there is a lot of bearish or bullish sentiment in the marketplace. And we are pushing up here a little bit. We are getting a little bit of push here. Previous week's number was a $1.17. We're at 1.35 now. That's starting to push a little bit of bearishness into the marketplace, a little bit of fear in the marketplace. We'll see if that amounts to anything this year or this week or not. Last week we were blessed. Last week we were absolutely blessed with some absolutely awesome implied volatility. It's been a while since we've had, we went through a very, very, very long string of being spoiled with 130, 140, 145 point expected moves in the S&P on a weekly basis. And that gave us some rich premiums. It gave us a lot of flexibility in building our trades. That hasn't been the case as of late. Last week was an exception. We had all kinds of news catalysts coming out last week. But this week, we're back to what I guess is the new norm, which is a fairly low number. Now, this is important to note because we put on a Theta Ferry trade, which again has been an amazing trade for us. We put on a Theta Ferry trade last night. Never got filled on it, unfortunately. But it was fairly tight on its strike prices, and had a couple of our trading members say, wow, you know, that's a lot tighter than normal. It is a lot tighter than normal. Expected range is a lot tighter than normal. And so you trade what the market gives you. And so I would expect that, especially with regards to our Theta Ferry trade that we put on each afternoon as the cash markets close, that we're going to probably be working with tighter ranges going forward here this week. We look at the Fear Greed Index. It is a contrarian indicator. It looks at all kinds of activity here. It looks at, you know, stock price momentum and the strength and the breadth of the marketplace, what's happening with that put-call ratio, the VIX, all of that kind of stuff. And it tries to figure out really where the sentiment in the market is. And again, it is a contrarian indicator, meaning when, you know, there's blood in the streets, as Rothberg said, when the blood runs in the streets, that's when you want to be buying. And when everybody is buying, that's when you want to be selling. So we do look for these extreme greeds or extreme fear areas to sort of look for turning points in the marketplace. We're not really there right now. We've been sitting in this neutral range for a while, starting to dip into the fear category here. But we would be looking for something down here in this range before we really got excited about getting long or getting bullish in this marketplace. So we are headed that way, but I don't think we're quite there right now. We look at the open interest, and boy, what a difference. What a difference a week makes. We do still have a huge gamma wall right in here around this 4,000 to 4,005 level. But really, you can see that, number one, just overall the level of open interest has diminished greatly. And that's because we've just gone through a quadruple witching expiration on Friday. A lot of the open interest has been sucked out of this marketplace. I would imagine that you're going to start to see that getting more and more reestablished here as we go forward this week. But honestly, for me right now, there's not a lot of big demarcation points here that make me stand up and take notice. I think that this is a pretty even distribution and doesn't really give me a lot of meaningful data right now, which has not been the case as of late. But again, that will change over time. We look at potential news catalysts for this week. This is always an important thing for us in our scalping room. Every Tuesday and Thursday, we spend time scalping the E-mini futures contracts. And a lot of times we do have news catalysts in the morning prior to the cash open that we try to scalp and get some action on. This week is, again, I would say a fairly staid week, not too much on the agenda for today, Monday. Tuesday, we have housing starts, and the Bank of Japan is going to declare their interest rate. Wednesday, we have CPI numbers out of Canada. We've got existing home sales in the U.S. and crude oil, obviously, Wednesday mornings, an hour after the cash open, that we get those numbers out. That's something that we always look for because we do a weekly oil ladder trade. Thursday, we do have jobless claims and the GDP, the quarter-over-quarter final numbers coming out. So Thursday will be an interesting day to see if we get any price action flow off of those particular numbers. We also have nat gas numbers coming out Thursday morning, and we happen to have a pretty decent sized nat gas trade on right now inside of our model portfolio that expires on the 27th, 8 days from today. So we'll be keeping a close eye on that. Friday, we've got durable goods, consumer spending, and new home sales. There's always the potential that some of those could be a market driver, but I would not anticipate it. So not a lot of huge news items to potentially drive us this week. That's it for the week, folks. Again, not a whole lot on the agenda in terms of news catalysts. I think last week we were a little bit overstimulated. Maybe this week we're going to be able to pull back a little bit, relax a little bit in our trading. It certainly won't change the dynamics of what we're going to be doing in our trading room. We will once again probably be working somewhere around 25 to 30 trades this week in our trading room. And we'll start off strong today with about a half a dozen trades that we start off with every single Monday morning. Start off with our IWM, our PayPal, our SPY, and our Qs. We've got both of those already expiring today. We're going to double up on those today. We've got our 0 DTEs. So we got a lot on the agenda today. It'll still be a busy trading week for us, but it may be a week where we don't have to worry about big swings. So that might be my final words on that, as I have to eat those words in a few days. But it does look like a little bit more calm week. If you do want to come trade live with us, you can check us out right here at try0dteforfree.com. You can come trade with us for 7 days for free and hang out with us. Hope that you guys have a great trading week. Let me know. Drop a comment in the section below, the comment section below, on what you guys are trading this week, how your week's shaping up. Always love to hear from you. Take care. We'll see you guys in the live trading room here in just a little bit.